Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Good morning, everybody. It's Cowboy. It is 8:30 a.m. EST, and apologies for no market update last week. I usually do the pre-recorded update for all of the tickers that I follow. It's Bitcoin, forex pairs, NASDAQ, gold, and unfortunately, just yesterday was a lot. Just had a lot of things happen yesterday. Was unable to get to it. In fact, it was such an insane day yesterday that I sat down after pulling myself out of the wild rapids of business, and it was like 8 or 9 p.m. my time. I'm like, oh my god, I never did the video. I never missed that video, like with the exception of last week, which I had realized I would miss. So we'll be back to that next week, and that is what that is. So good. USDJPY. You got a massive double top here, right? So if we back up and we look at the chart going back like to the summertime, to midsummer, we had this massive range that was going on here, right? Just price kind of flopping up and down on the USDJPY, and that was between 146.3 and 149.04. And what ended up happening is, price finally did break out. We had a couple of deviations where price broke out of that range and fell back in. But when it finally did break out, it gapped up, and that was due to news. And as it did, that was a sustained rally upwards. We had price come back down to touch this range more or less. We could refine this a little bit, but so the top of that range was more or less 149.19, and it came down and almost grabbed the gap up, right? It didn't quite get there. It more or less touched the top of the range though, and it bounced right back up. It rallied back up. So the question is right now, are we going to see another long-term range? And that would be indication that the dollar is going to be, more or less hanging back, right? Like the dollar isn't going to continue to rise, or it's just not ready to make its big rise, right? It might rise later, but perhaps it's going to gather steam before it does. And that is in relation to the Japanese yen, right? So it might behoove us to take a look at the dollar index here. But before we get there, let's just take a look at what's probably going to happen with the USDJPY. And it's pretty bullish overall, at least in the near term, right? But we are at a point where we may run out of that bullishness. I think there might be at least one more attempt to grab the top here. But the way I think that's going to go, and it's really hard to say, just, knowing what the algos say here, there's at least going to be either sideways or up, and we're going to see what I think is going to be possibly a bearish retest of this range right here. And that means that price may kind of eke its way up to about, what is this, 152.55. And then it may continue down at that point. Now, if it continues down, then what'll happen? Well, based on what I'm seeing in the algos, we might see some sideways where we start to see a range. And that range may or may not be here. We'll see about that. We're going to have to see how it behaves. But between basically 149.40 and 153.32, price may eventually start to bounce in there. And that'll be fine. There should be some good trading in there. We are coming up to the end of the year, the December rallies and such things. So we may be able to see some opportunities in that area. We'll definitely see opportunities. The markets are just getting relatively volatile. It's great. I love it. Plenty of trading going on. So probably something like this and like that. Now, once it gets down to here, and I'm counting on it bouncing on this consolidation right here. So first of all, let me just fix my screen a little bit here. Give me 1 second. There we go. Whoa. All right, good. All right. And we should, I appreciate that, Joel. In my private comments, Joel caught what I caught right as I caught it. But either way, you were still able to see the candles. They just looked funky. So now that we have strictly green candles, what may happen is a move up and a bounce off this support. And then once this, price gets down here, whether it bounces or not, we'll have a better idea what's going to go on. So let's take a brief look at the NASDAQ. If we have time, we'll take a look at Bitcoin. This was a prediction I made and more or less happened. There was a pullback and then a move up. So the NASDAQ, basically after the China news where everybody freaked out, it just came right back up. All it did was print higher lows. So it's what I keep saying, everybody, and for multiple reasons, for multiple players, the markets must go up. Now, that doesn't last forever. There are always pullbacks. But if you look at the history of the stock market, whether it's NASDAQ or whether it's anything else, what you'll notice is that I'm going to go to the monthly here. This is a long look back, guys and gals. This is going back, more than 15 years or 10 or 15 years. These pullbacks get eaten up. So every pullback that you see just gets eaten up. It's just how it is with the stock market. And that is because of where we are in the larger economic cycle, right? We're at a point where the model that we used in the past is starting to change. The dollar-based world economy is starting to change. However, because of the way that things tend to change, which involves conflict, usually you start to get hot wars and things like that. We're getting Ukraine, we're getting the conflicts in the Middle East, and now, Venezuela is starting to heat up a little bit, although I don't know that we're going to see anything down there. I think we might see something in Colombia before Venezuela, or it might all just end up being, pressure and not battle. But under any circumstance, all of the elites for 100 years, going back to Bretton Woods, almost 100 years, 85 years, whatever it is, what they've been able to do is extract wealth from the middle class, right? They created a middle class, and the middle class did really well. And after a while, though, they started really heavily extracting, especially in the US, and the middle class shrunk, and the middle class is being eviscerated. And when there are no more middle class players to steal from, they start to steal from each other, and you start to get hot wars, and the bond market starts to look a little funky, and you get the stock markets go up. If you go back to Weimar Republic in Germany, you saw massive stock market moves up, but you also saw people needing entire, wheelbarrows full of cash to buy bread. I'm not saying that we're going there in the US. I think we have a much more sophisticated system than that. But we're kind of going there in a microcosm way, if not a bigger way. Things are getting more expensive. We're getting inflation, and the stock market's going up because everybody's putting their money in it, because where else are they going to put it? Gold is also reflecting that. Gold's seeing a massive pullback. But right now, what we're probably going to see with the stock market, with the NASDAQ, is just more up, right? And the market's pricing in, a 25 basis point cut. So a 0.25% cut is what's expected from the FOMC. The stock market is probably rallying for a number of reasons, but coming into this week, we got this gap up on the NASDAQ futures, and the stock market's going to rally. And we're in an odd time because precious metals are rallying the whole time that the stock market is rallying. So let's take a look at gold, and then we'll move on to the private live lab to cover Bitcoin and everything else. Nice pullback in gold. So gold has broken below the local levels that we were looking at. So, and that's, I don't know, I think it's healthy. There's a lot of talk online about this. And is the gold cycle over? Are we looking at the 70s, or are we looking at the 2010s? Right. So let's, briefly do that. Look at a higher time frame chart, and we'll see what those eras looked like if I have access to 70s data. Yeah, I do. Okay, so if you look at the 70s, the move up in gold was insane. It was remarkable. You had, let's see here. It's like a fly that's made its way into the room. It's funny. That's just never happens. I want to look at the percent gain here from the bottom of the market in 1976, the bottom of that market. It was like $88, and it made its way up to $800. This is a times 10 move, folks, right? Times 10 move. And so if you look at this, yeah, sure, you had these pullbacks on the way up, right? In fact, if you go to 1971 and you take it back a little bit further, you went from $32 to, $900. I mean, that's a like 80, what is that? 26,000% move. So you had this move up and you had these pullbacks, and the pullbacks were significant on the way up, right? So if I were to map these pullbacks, you're looking at, let me see, price went from 32 up to 75. So it doubled, which is what we just saw, really, right? Right. We saw a double in price. It's very similar to what we just saw happen from 1970 through 1972, except we saw it happen in, like within the year. And the pullback from that doubling was 14%. And that's, 14% is notable. Now, the next move up went from $60 up to 113. So basically that's another doubling, right? A little more than that. So it doubled, and it doubled that time from December of 72 up to June of 73. So, half a year, a little longer. And the pullback from that doubling was 27%. So the first time it doubled, it pulled back 14. Second time it pulled back 27%. And then the next move up is going to be probably a smaller percent pullback, but it went from 90 to, it basically doubled again, almost exactly. And then the pullback from that time when it doubled was 25%. So we're looking anywhere from 14 to 30% pullbacks, and then price just continues to move. Well, you get a massive pullback right here. There is a cool off from when it went to like 190, and it went down about 50% to 100, and then of course it went all the way up to like 1,000. So no, that was a bit of a unique time. We got taken off the gold standard, and anybody watching this channel should know that history. But if we continue to modern times and we look at this, we had gold double. Let's see. It went from more than double, but this was in 2023, October 23. This move up, this parabolic move, that's almost a triple in price. So let's just say we get like a 30% pullback, right? I don't know that we will, but 30% pullback is like to $3,000, right? Now, structurally, if we're really in a massive bull market and we're really seeing a paradigm shift, then structurally 3,500 is a good pullback. That's a 20% pullback. That's within the 14 to 30% range. If that doesn't hold, then you're talking about maybe 2,780, or just say 2,800. So if we're going to get a real true massive pullback, those are the levels we're looking at for gold. But I don't know that it's even going to go that far, because central banks are interested in buying gold. We may just get sideways chop and move up. We might get price kind of rotating at the, maybe to 3,500, and then just sideways chop and then move up. The world is changing very quickly, and the calendar on here is, there's not a lot of room for this to this is going to what I think the big change days could be 2028. I think that's when we're going to see, the election in 28, I'd say. I think that's a big date for changes in history, and then maybe like the year after that. So gold could chop sideways until then and pop up. It could just continue up. But I could tell you right now, the gold is moving up for fundamentals. It's moving up because of central bank demand, not just like people on the street going to their gold shops. So watch out for that. We're going to go ahead and go into Bitcoin over at the private live lab. There is a free algo, links in the description. So go ahead and get that, right? I do show you in that description how I build an algo, and I show you how to turn it into code, how to put it on the screen as an indicator. So if you look at my screen like right now, if I go back to a different time frame, you see that those little red and green, arrows or tabs, what have you. I developed something like this. It's different than this, right? But I just show you how it's done, and then show you also how to connect it to your computer so it can trade for you. Go ahead and do that. Thank you for watching, and we will see you tomorrow. And if you have any requests for charts, just put it in the comment section. Thanks for watching. Never forget.
Join us or die.
Just kidding. You're not going to die. Maybe of old age. That's fine. We love you. Bye.